And that's the way I like it. And that's the way I like it.
Now, don't get me wrong here, folks. I do actually like this message because it's a simple reminder that you can, in fact, buy a house with only a 3.5% down payment. And putting less money down to get into a house can actually be a pretty savvy play if you're saving that cash to put into other investments with higher returns, or potentially adding new value to the property you're buying by remodeling it. Plus, real estate generally appreciates in value as the years roll on. Buy a place earlier, it appreciates in value, and that helps to offset the lower down payment that you paid up front. I get it. And in a lot of cases, that can make a lot of sense. But there's also a case to be made to wait to put more money down, especially with the higher interest rates that we're seeing right now. Let's break it down from both sides. You've got your $450,000 house, and in one scenario, you put 3.5% down to get in, and on the other side, you put 20% down to get in. Now, if you only put 3.5% down, your monthly mortgage payment will be $3,579.86 per month, and the total interest that you'd pay over the course of that 30-year loan would be $553,862. Now, on the flip side of that, if you put 20% down, your monthly mortgage payment would be $2,929.61 per month, and the total interest you pay over that 30-year loan would be $459,160. So yes, it may take you longer to save up that down payment, but by going that route, you'd be rewarded by having more equity in your house instead of paying that money to the bank. Plus, you'd be saving $600 on your mortgage payment every month. And honestly, you can be successful by approaching this from either side. It's completely case by case. Just make sure that you're aware and comfortable with your costs after closing if you do decide to put less money down.